All right, so if you're having trouble understanding your numbers, it's probably because your chart of accounts is unorganized. So in this video, I'm going to go over why your chart of accounts is important, and go over the exact chart of accounts template that we use for our seven-figure Amazon and Shopify clients today, as well as how that chart of accounts actually feeds into your P&L and balance sheet at the end of each month. So just a quick intro on myself. My name is Daryl, and I'm the founder of On Point Controller. I've been a corporate accountant for over 10 plus years, working with various 7 to 9 figure companies, and some big name brands in there. And then on top of that, I have a handful of 7 figure multi-channel Amazon and Shopify clients that we work with. So a question I get a lot is how to actually structure your chart of accounts. So the way I like to think of your chart of accounts is like a pyramid, right? Your COA or chart of accounts is your foundation, right? And then that kind of feeds into your financials, right? And that feeds into your whole strategic planning process. And you can't do one without the other, right? It's kind of like a house with the foundation. You can't build on top of that without the foundation. So your chart of accounts is, it essentially provides a structure for your financial reporting, right? So every in and out transaction that comes in and out of your business, um, that gets put into a specific bucket, and then that feeds into your P&L balance sheet and statement of cash flows at the end of the month. And then from there, you're able to do your forecasting, budgeting, create KPIs and do all sorts of forward looking analysis that actually helps your business grow and prevent downside risk. So, so let me kind of get into the exact chart of accounts here. So at the top here, we have the chart of accounts, specifically made for e-commerce brands. So while this probably won't be comprehensive for your business, I believe this is a good starting point, and this is where we start all our clients. And if you want to actually use this for your brand, you could download this and import it into Xero. Uh, just check the link in the description. And then if you use QuickBooks, you could also use it for that as well. But you're gonna have to just you know adjust the template, and I'm sure there's a ton of videos for that out there. So at the top right here, you have your bank accounts, right? You probably have 1 or 2 bank accounts and a PayPal account. I would hope you have a PayPal account. Um, so that's highlighted in green. We kind of have these standard fixed asset accounts. That's pretty standard across all companies, all types of companies. You want to have clearing accounts, right? So, and also pay attention to the numbering conventions. Everything that starts with a 1 is an asset. Okay. So your clearing accounts, you have your Amazon, PayPal, Shopify clearing, and then payroll clearing account. Um, and then the 2s are all your liability accounts that go on your balance sheet. So you probably have 1, 2, even 5 or 10 credit cards. So you want to use the 2 numbering convention here, and then all the sales tax that's collected via Shopify, you want to put in here to this sales tax payable account. Or if you want to get granular, you could put it into, something more specific to each sales channel. It's really up to you. Again, it's your business. You could do whatever you want, but um, you know, your accountant, your controller is probably going to have to make a decision as to, how granular or how general they want to get. Now, for your P&L accounts, which is probably what you're here for, we have your Amazon accounts right here. So you have your Amazon sales, refunds, promotions, reimbursements, shipping, right? These are all the 4 accounts. So every time you get a refund, a deduction from your account, you would code it to the 4001 account, right? If you have a sale, right? Your sales, they come bi-weekly as a payout, right? That will get coded to the 4000 account, and so on and so forth, right? And then you have your Shopify sales, right? You have your wholesale sales, Other sales, I would put, any smaller channels, because some people, they might be experimenting with TikTok or Walmart or eBay and doing a little bit of volume. So I wouldn't break that out into an actual account until that sales channel has a material amount of sales coming through it. And then we also have our wholesale account. So if you do wholesale, you want to break this out more times than not, especially if you're doing volume. So that's it for the revenue accounts. The next thing we have is our COGS, our 5 accounts, which are our COGS and purchases, right? That's self-explanatory. And then all the 6 accounts will be your operating expenses, right? So at the top, I usually have like all the Amazon fees, Shopify fees, right? So that's about it for the chart of accounts, right? Everything else is kind of standard, right? But as a general note, in terms of being granular, you don't want to be too granular in a way where, um, and let me kind of go here to P&L. You don't want to be too granular where you have like 100 accounts here in your operating expense section, right? But you don't want to get too wide either where, let's just say, for example, you only had one sales line item here and all your Amazon, Shopify, Walmart, TikTok sales got dumped into one line item. Well, that doesn't really do me any good if I'm trying to understand, channel level profitability. So you're gonna have to make a decision as to how granular you want to be. But um, I think being in the middle is probably where you would want to be. And so yeah, so just to kind of take a look at a sample P&L and L and how that actually feeds into how your chart of accounts feeds into your P&L, right? If I drop this grouping down, right? So all those accounts will net into net Amazon sales, right? All these accounts net into net Shopify sales, right? And that gives you total income or total sales, whatever you want to call it. Cost of goods, right? You'll have your cost of goods section. Um, it depends on how you want to break this out. Like you could break down all the selling costs into its own separate line item, or I've seen some people move it up into COGS. I'll just leave it here. And then you have everything from salaries, et cetera, and then net income, right? So that's how it would feed into your P&L. You could see everything is extremely organized, and it all starts from your chart of accounts. And then from the balance sheet perspective, right? All those accounts would feed into your balance sheet. So here you have your checking accounts, right? Your fixed assets, right? Any vehicles that you've purchased for the business, computers, etc. You have your credit cards, all the sales tax that's been collected, Amazon loans. So that's how it would feed into your balance sheet. So yeah, so that's about it. So once you implement a solid chart of accounts, along with structuring your P&L and balance sheet in a way that you want to see, your financial foundation is all set, and you can go ahead and produce your financial reports every month. Um, Again, as you go, you're probably going to want to add new accounts. So just keep my guidelines top of mind when you're doing that. And also, if you want the exact chart of accounts here that we actually use for our clients today, you can go ahead and download that in the description. Um, and then lastly, don't forget to subscribe. Um, if you found this valuable, would really appreciate that. But yeah, that's about it. All right, have a good one.